All right, guys, let's go over a winning trade that departs a little from my normal style. We were watching AGIO for quite a while here. It had this big run. It was in a hot sector, biotech, broke out to new highs, and we were waiting for a pullback entry. And we got that pullback here a few days ago. And then what I was watching was a test of this 20-day moving average. And we got that test here. It had failed the 20-day and then remounted it all in one day. And we got this hammer formation. That's what forms these hammer formations. We love these hammers when we get some kind of support violation and a close above that support. And that's exactly what we got in AGIO. We entered the next day around 123.70. And that was our entry. Hot sector, biotech, but biotech was a little overheated. The market, we've been talking about shorting the market for a while. Today obviously was the big dip, and we do have a short in place there. So I talked about earlier in this month, to start the year, I wrote a blog post about adapting to what's going on in the market. You can't have a concrete set style that you always use. You have to be able to change it up a little bit according to the market. And for the last few months, 2014, we noticed that our targets weren't getting hit. So we'd pick a right stock, we'd get this nice little move, but we'd fall short of our target and then end up having to take a small loss. So I've adapted in the early part of 2015. Obviously, if things change, we'll adapt again. But for now, I'm taking quicker profits. So my original target was in the 130, 140 range. And that's, for this type of setup, that's what I would usually do. This type of hammer would clue us in on a retest of the high. So we'd place our stop here somewhere in the 130, 140 range. But we adapted this year. And I actually, once I got the big move up to about 127.50, I switched it from a swing trade to a day trade, which I rarely do. I usually stick with my targets and stops. But I decided to change it up this year. So we got a nice 4-point gain in one day. And if we would have stuck with our target, as you can see here, we would have given up that nice gain and ended up taking a loss. So now we violated the setup. The 20-day has faltered here. Biotechs have gone down. The market has gone down. So we may get another entry here at the 50-day moving average. So this pullback is actually going to be a good thing because, IBB, which is the biotech ETF, is way overbought right now. And, we're testing highs. We want to see this pullback here. We have a bearish engulfing candle. We'd love to be able to enter here around 310. And same goes for many of the biotech stocks. Let's focus on AGIO here. Now, if we can get a market pullback to this 50-day, we'll look to re-enter. But for now, we're happy with that quick profit, and we'll continue to do this at least for, until the market tells us otherwise. Once we get into a stronger trend and we see it's not so choppy anymore, we'll switch back to our normal strategy of trading. But for now, we've adapted, taking quick profits, and that's what we got here with AGIO. So if you're interested in the trade report, and these two trades were alerted to trade report members, you can go over to the Bulls on Wall Street website, go over to Swing Trader, and if you just want to sign up, go right into Swing Trader. For me, since I'm logged in, I have access to all these old reports here. You can click on one of these reports here, and you see I have a quick summary of what we're looking to do. Usually about a 10-minute video that goes in depth into our game plan, and then a quick review here of what was in the video. And our focus list here, you can just click on this, and you get quick access here to the focus list stocks that we're watching over on FinViz. You can take it to work with you and just quickly scan the 5 to 10 stocks we're watching for the coming day. So if you want a free trial to the report, just go over to Swing, and instead of clicking right away, go to part-time trader free trial, put in your information, and you get a 14-day free trial. So that's it for this blog post. I'll see you next time.